Good evening. This is Dwayne Lowry for the DPP Grain Desk with the commentary for Monday evening on February 20th. Calls tonight are going to be higher. Outside markets, while the grain markets were closed and did not open the traditional Sunday night or closed all day today because of the President's Day weekend, the outside markets were open last night at normal hours. They closed, settled today a little bit earlier, but at the end of the trading today, you had gold up $9.60, crude was up $1.68, and the dollar index was about 40 or 50 points lower. So that type of tone will set the early tone in the grains. China lowered their bank reserve requirements by 0.5% in an effort to stimulate their economy. This was not a big surprise. It wasn't necessarily expected this weekend, but it was expected to be something that would happen within the next few to several weeks. Their attempt to stimulate the economy is based on slower growth rate there over the last few months than what they have expected, and I think a big part of that is due to Europe's slow economy and problems there that's hurting China's exports into Europe. So that provided the inflation type of talk, the investment talk that the trade is going to want to risk on type of attitude where they want to own commodities. I think that's a knee-jerk reaction. I don't think this is a earth-changing, trend-changing, or trend-developing type of news storyline. This is a reaction. I don't think it's anything more than that. So that's going to set our early tone. In terms of the weather, the other influence possibly for tonight, South American weather has been relatively consistent for the last several days, and most acres are doing just fine. There's been some concern about dryness in the southern parts of Brazil. They saw a little bit of rain over the weekend, with a lot more rain coming this week. Argentina has been seeing a much improved moisture situation over the last couple of weeks. Production ideas there in case of beans are on the rise. There's a lot of disagreement about production potential on soybeans in Brazil, but no matter how you slice it, the world has a plentiful supply of soybeans. You do not have a supply threat here. You've got a plentiful supply of corn for this year. You're not going to have to ration demand usage for the old crop year and the new crop based on increased acreage expectations, and anything close to a normal yield is going to end up with a significant increase in corn carryout here in the U.S., probably something close to doubling the corn carryout projections, maybe more, depends on, of course, on final yield data and things of this nature. But you're dealing with a growing carryout situation. Wheat supplies are abundant in the U.S., plentiful in on a global balance sheet, so you don't have a storyline there. Just to give you some perspective here, because everybody's going to be all excited tonight about the outside markets, and they're going to be excited about Friday's strong performance in the grains, and then to have another firm opening here tonight. But since October, beans are 25 cents below the peak that they had on a rally during October. They're 20 cents higher than the January price peak. The wheat's at the midpoint of a trading range it's been in since October, maybe on the lower part of that trading range. Corn is below the peak that it had on a rally in October by probably 35 cents. Corn's below the January peak by probably 20 cents. So even if you're up several cents tonight, we're not talking about anything that's big, new, or a new developing trend. The grain markets had a price ceiling type of theme around for several months, and I don't see anything here that's going to change that. So there'll be some excitement tonight. I wouldn't be surprised. A reasonable call here is to call corn and wheat 3 to 5 higher, beans 8 to 10 higher would not be unreasonable. The question is, what are they going to do with that? What are they going to do after having some strength tonight, tomorrow? Are they going to be able to maintain it? Is this the start of a new trend? And the answer, I think, is sadly no. So I think that got to continue to look at price areas that we've been at over the last few months as offering a price ceiling, and I think you're going to really have nothing more than another type of a test of that type of level, a resistance level. And I think short-term rallies here still are meant to be sold as long as you've got a rising carryout projection for next year and a large acreage figure, which, by the way, on Thursday and Friday, USDA will have their Ag Outlook Conference, and we're going to be reminded again of large acres. And I think that if anything, those total acreage numbers in the last USDA report were probably underestimated, and you're going to probably see even larger acreage numbers. So the fundamental news that's going to be coming at this market over the next few months is not going to be very price friendly. If you're going to find price friendly news storylines here, it's going to have to come from a U.S. spring summer weather problem, and who knows what that's going to be. In the meantime, I think this guy has to be worried about downside risk here from here forward. So look for strength tonight, but I think you're going to see a major top being defined in soybeans here this week, and I think you've got a price ceiling mentality out here in corn and wheat, and downside risk, I'm afraid, is much more significant than what we might want to think about it. For the DPP Grain Desk, this is Dwayne Lowry. Thank you.